10:23 a.m. Pacific Standard Time. The date is that 223.14 on the Dow. We got a 5-year history of this bull run in the Dow. One of the things that we're going to say is that the Dow is up 236% from its 2009 breakout lows right here. And we've gone 1 year. This is the second year in 2010. 2011, we had that nice 5-month pullback to an all-time support level right here. And then we broke out above this resistance level and starting 2013, 1 year ago in January, we took out this major top of resistance. And then we continued to run higher for 5 months. Then we had some pullbacks and we tested that rising 10-month moving average, the rising 20-month moving average. When they're rising, that's an extreme good bull case. Now, what we're going to say is, though, over the next 12, 24, it's going to be 12, it's going to be 18, 24, and 36, 3 years out. What I will want to show very carefully here is what has happened and the following. We put a high in the Dow Jones Industrial Average of 16,573. That was your January 2014 high. The low was 15,617. So you had a 1,000-point reversal right here. But then we haven't seen a good sell-off in January for many years. Now, the February low was 16,225. One of the things that we can say clearly is that we had 1,237.38 point reversal in the Dow. That was a very, very nice way to start January off. And so that was the reversal from the peak of 1/1/2014 and the low of 2/1 in this calendar month. That low was 15,340, and that was a total round trip reversal, 1,237.38 points. Now, when we made the bottom here of 15,340 in the month of February 3rd, the first trading day of the month, we did the following. We had that reversal to the low of what I just stated. Now, from the low of February, and February has not closed out the month yet. But let me just tell you something. It was 1,200 and some points here to the bottom, from the top to the bottom low. And then we've come back off of this bottom, which was a great support level for the bull again. Let me tell you what that 10-month moving average is. It's 15,547. 15,547 is the rising 10-month. And not only that, all of last year the 10-month was rising forever. However, this was a major top. We've had a big 2,000-point top down to bottom up in the Dow. I will tell you the total points here in the January period was 955 points in the Dow in January. I'll also tell you that you have had 885 points in the Dow to the bottom up. And this is an all-time high. I can tell you, though, that when we go back to 1990, let's start it out right here. In 1991, the Dow was ripping and roaring for a lot of years. Here's what 1993 looked like. I was there. I remember it like yesterday. You were just banging them out, and they were running higher. But you got to remember one thing, that the world was different as it was. So we're going to go to the period of where the bull started its rally. Back in 1996, we went straight up. We made highs in 1997. We had pullbacks, but in 1998 we got overbought, and we have the pullbacks right here, which was September of 1998. But look at what happened. 1999, the Dow was making all-time monthly highs at resistance levels, and it popped. What ended up happening, though, from that big calendar movement, year 2000, we went all the way down to 9,700, and we did. And we broke below that 10,000 psychological mark. And then as we got over to into 2002, we made the all-time bottom there at 7,500 on the Dow in that year, because we did. And we rallied up to 2003. So here's the 2003 bottom. It's very simple. It was right here. That 2003, we had a nice little rally, and that was March of 2003. And we're coming up of March of 2014. And March is traditionally a good month. And we rallied all the way up here to the highs of 10,462 on 12/1. That was December 31. All right. Then guess what happens? We make the lows now. There's 2003 to the top of 2004. We started 05. We had a lot of volatility. This is back in the dot housing bomb bust. We rallied up in 2006 to the highs, and here's where this comes in. It comes in off of the low 2009, but we drew those other trend lines in there, and we can take them out. What I am telling you, though, is 2009, we're up 236% in the Dow. That's how much the bull has got in its current bull rally. And this is a very long-term rally going back many, many years. I can tell you right now that the world is not the same as it was what I just showed. No. We had a much better economic expansion. Every one of them have failed. And we're at all-time highs in 2014. Like I said, it's been over 2,000 points, and we're not even done with February. I said before we started this year that we are going to start on March 1 of 2014. We are going to complete that stimulus in QE3, 1, and 2. All of the stimuluses that were put into this recovery is not the same as other recoveries. That's what I could say. And not only that, we have not had a full 10% correction in the Dow for a long time. Our last meaningful correction out of the 2009 was when we got good and short. Markets had a 5-month reversal. That was in 2011. And remember that what goes on in previous years is also below the market, your ultimate support level. In 2012, they started up. We made a high right here. That was, believe it or not, 13,297. This high right here, 13,338. But guess what happened? It had a 1,000-point reversal to 12,311. Yes, it did in that bar. Now, this lower bar here, we came back all the way to the low of 12,000 on this Dow. That was in 2012. The high here was 12,896. What I'm getting at is that the Dow's had a 236% move, which is one big move. But let me tell you that moving forward in the next 3 years to 5 years, but short time for the rest of this year, we're going to have a lot more volatility in this market. And here's what happened in 2007, 2008. Financial crises, Iraq war, Bush administration to the height of that reversal. Not only that, you had from 1997 to 99 a big high that was put in, but year 2000, it came all the way back down to that 2003 low. This economic expansion, earning expansion, is going to have a lot of bumpy roads ahead of us. I will tell you though, as a volatility trader, is this is the kind of move that has started 2014 out, which is also going to make this market, both the bull and the bear, are going to have big moves. And you always do have these big volatility years prior to a big move. And what am I talking about? Here's what I'm talking about once again. When you're coming off a big move from '09 up to here, and you put in the high in 2013, which was here. This is what 2013 started off like. 14 did not. But the bull is still in there and will be for a while. However, the bear is going to be in there as well. And that the volatility gets a lot bigger after a 5 year expansion and all of the stimuluses, FOMC, putting all their stimulus in there with QE 1, 2, and 3, cheap money, cheap interest rates, you name it. Everything mechanically has been done to get the consumer happy. The housing market, I can tell you that cheap money is not going to be around, and that this Dow Jones is going to get more volatile for both the bull and the bear. And as we approach the month of March, is historically a good bull run. But when we start hitting in that April to May period, that's when you're going to see a lot lower lows in the Dow 30 right here and right now. That means that the Dow Jones 30 stocks are going to have big pullbacks in order for this volatility to continue. And we're coming off a major earnings season. There is no worry about the debt ceiling. There is nothing to worry about because that's how the bull gets. And that's about the time that the bear comes in. So be aware there's going to be a lot more pullbacks. And that 10% correction, which would bring the buyers off the sideline, has yet to happen. And we will see that at some point in 2014. And that there would be a great buying opportunity.